Good morning and welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go over some live rates and then talk about second mortgage HELOAN. So give us a minute here to go live on all the different platforms and then we'll get it started. You can go ahead and drop a comment there in the chat as you tune in. We got the comments pulled up, the chat pulled up on the screen there. So go ahead and drop a comment there in the chat. We definitely appreciate it. All right, so it looks like we're live on all the different platforms, so we'll go ahead and get it started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there. And you can also drop any questions you have in the chat as we go through our deep dive topic here for today. But let's go ahead and get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every morning at 11 a.m. Eastern on the show is go through our actual live mortgage rates. And then we do a deep dive into different loan type. And today's loan type is going to be HELOAN. So second mortgages here. I know Jose has a few different ones to go through, and I'm sure he'll talk about the difference between a HELOC and a HELOAN when we go through here today. So before we do that, let's go ahead and check out the rates. So Nick, if you're ready, let's pull up today's rates and see what they're looking like this morning.
All right. So before we do that, we want to make sure everybody understands what we're going to be pulling up here. We'll check out all of our loan programs for today. It is July 16th, just after 11 a.m. So all of our initial rate sheets are live here. And we'll set up a basic scenario to compare the APR across all the programs. If you'd like a full breakdown and itemized loan estimate of all the fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. For the scenario today, as we do every day, we will set up a standard single family home, a $500,000 purchase price, $400,000 loan amount. So that corresponds to 80% loan to value, 20% down payment. We'll use an estimated 760 credit score and an estimated 40% debt to income ratio. So those are the settings. Let me go ahead and share my screen. And we'll see the rates for today. So popped up just a tad, but thankfully I think we have some general consensus that the rates will start going down here soon. So first up here, 30-year fixed conventional for a primary home, rates as low as 6.375. Final APR comes in at 6.697. Remember, we were just over 7 just a few weeks ago. Now, if for any reason our customers don't qualify for a conventional option, the next option we typically want to present is an FHA option. FHA allows more leniency on credit issues as well as a much higher debt to income ratio, but does require upfront and yearly mortgage insurance. The rates for FHA today come in at 5.625, final APR 6.569. So notice if our customer qualifies for both, FHA could be a good option, but it does require that monthly mortgage insurance. And our customers that need to use it, very comparable here to conventional. Moving on to our VA, only our eligible active service members and veterans have access to VA, but it's an amazing program here if you are eligible. Rates as low as 5.75. Final APR with any funding fees included, 6.067. Hopefully we see that drop below 6 here shortly. And notice when we're comparing across programs, VA is definitely more favorable than FHA and conventional. Definitely a great program for anybody that is eligible. And our final agency government option here is our USDA option. USDA is only for properties that are in USDA areas, the rural areas of the country typically. And our borrower, if our borrower and the property is eligible, USDA comes in today at 5.75, final APR 6.488 with all of the fees included. So notice if our customer is shopping in these USDA areas and they're comparing to an FHA, USDA is a little more favorable and more favorable than conventional. So definitely a good option if our customers are eligible and the property's in those areas. And that rounds out our standard options. If our customer doesn't qualify for those, many other banks or lenders have to deny them, but that's where we love to present our additional options, starting with our 30-year fixed non-QM alt-doc option for a primary home. So if our borrower doesn't qualify for conventional or any other programs here, needs to use alternative documents, we can move to our alt-doc option. We can use bank statements, 1099s, P&Ls, asset depletion, all kinds of different options. Most likely, this is a bank statement option we usually see here, 6.75 rate, final APR 7.067. So notice we're very close to conventional for our borrowers to use alternative docs when needed, usually within a half a point, and we're right there under that today. So great option to compare for our borrowers that need it, very comparable to conventional. Now moving on to our investment properties. Lots of flexibility with non-QM for investment properties. First up is our non-QM alt doc option. So again, bank statement or similar, coming in at 7.25 rate, final APR 7.595. And we'll compare that to our other investment property options. So remember, there are no government programs, so no USDA, VA, or FHA, but we do have our 30-year fixed conventional for investment properties, coming in at 7.125 today. Final APR 7.482, which is a touch cheaper than alt doc. You see these flip-flop every couple days. They're pretty comparable for alt doc compared to conventional investment in pricing. But we always recommend our investors check out our favorite options, our DSCR options. DSCR stands for debt service coverage ratio, no income or employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents can cover the expenses, aka the property will cash flow, that's a ratio of 1 or higher, which is preferred. For all these demos, we use the ratio of 1.5 so we can see all the programs. First up is our 3-year prepayment penalty programs. The rates are low as 6.75. Final APR comes in at 7.093, which blows conventional away. Absolutely amazing. And our options that allow a 5-year prepayment penalty come in today at 6.5 rate. Final APR 6.823, which again blows conventional away. Very cool options. And some states don't allow a prepayment penalty, and some investors don't want one. No problem. We have our no prepayment penalty option. Rates as low as 7.375. Final APR comes in at 7.710. So notice this is a little higher than conventional when you compare them, but most of our investors will typically prefer a DSCR even when the cost is higher. And if they can add a prepayment penalty, definitely a great option there. And the final 2 options that you see here are very popular requests these days. Our second mortgage option, 30-year fixed second mortgages. Most people are used to HELOCs being the only option to get cash out of a property and keep their first mortgage, which is a lot of our customers have a low rate first mortgage. This allows them to use a 30-year fixed second mortgage to get cash out of that property without touching their first mortgage. These are also non-QM programs, so we can use bank statements and similar. Rates as low as 8.125 and final APR 8.278 for getting cash out of a primary with a low fixed rate second mortgage, definitely lower than HELOC rates, and many of our customers don't want an adjustable HELOC. And the same option, 30-year fixed second mortgage, non-QM programs for an investment property. So our investors can get cash out of their investment properties, rates as low as 9.75, final APR 10.243. So again, get cash out without touching that first mortgage and can use bank statements or similar. Very cool options. Let's go ahead and change the screen where Jose will get into a deep dive into what we were just talking about, our second mortgage options, the fixed rate second mortgages. So Jose can explain a little bit more about what we mean and do better examples. These basic examples here are 2 basic scenarios. Jose will have some more examples for us. So Jose, what do we have today?
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. First, to clarify the difference between a HELOAN and a HELOC. They're both tapping into your home's equity via a second mortgage. They both allow you to keep your existing first mortgage in place. Now, first, the obvious reason here is the HELOAN is a closed-end mortgage, right? It has a fixed rate, fixed amortization at closing, full lump sum. Full amount is distributed at closing, and you start making your payment when it is due. The HELOC is an open-ended mortgage. You would have the option, for example, if it's a $200,000 HELOC, maybe you're only going to draw $100,000 at closing, leave the other monies there for when needed, and you only pay interest on what you owe. Now, for the very important reason why the HELOANs are really taking off so much in this market, first of all, the interest rates on the HELOANs are going to be a little bit lower. but primarily the HE loans offer multiple types of income that can be used. That is the big one, because not only do we have full doc, but we have bank statements. Now, on the HELOC, we do have some limited bank statement options, but definitely not as much liquidity in the HELOC market with bank statement loans as there are in the HE loan market, where it is a totally accepted income stream. Full doc, bank statement, profit and loss, 1099, and even DSCR. So let me go ahead and share my examples with you, because with that being said, you will note then that the HE loans are definitely much more investor friendly, right? Because our investors are the ones that love using all of those alt doc income programs, especially the DSCR. Maximum LTV for the HE loan of any type of income is 90%. And the option that reaches the maximum CLTV is the full doc option. So here we are looking at 10.25% as our lowest cost option at par. And you can buy that down to 9.375 at a cost of 2.5 points for our full doc primary residence, 90% CLTV. So now our bank statement option does drop the CLTV to 85%. 10.625 lowest cost option at par, and you can buy that down to 9.625 at a cost of 2.375 points. And our HE loan primary, I wanted to show the difference. Actually, this is for our 1099 primary at 85% LTV again. And these are the same rates as the bank statement. In many cases, they view them as the same risk classification, hence the same interest rate and liquidity. So 10.625 is at par, and you can buy that down to 9.625 for our 1099 primary cash out option. Now, our P&L option is also 85%, and you're looking at 10.75 with a little bit of a lender credit, 0.125, and you can buy that down to 9.75 at a cost of 2.375 points. And now our investment options. Now for our investment options, we are capped at 80% as our maximum CLTV, and this is for a full doc option. Very good rates though here, as you see, 9.875 is our lowest cost option at a quarter point, and you can buy that down to 9.25 at a cost of 1.625 points. And our bank statement option is still 80% CLTV, 10.625 lowest cost option, half a point cost, and you can buy that down to 10.125 at a cost of 1.625. And our P&L option for the HE loans now here does drop to 70% CLTV for the profit and loss option. Now, these do have pretty interesting rates, as 10.25 has a lender credit of 0.75, and 9.875 is our lowest rate option, has a cost of only 0.125, obviously because of our low 70% CLTV. And our last option here, leaving the best for last, the very popular DSCR option for our HE loan, for our investors looking to cash out to a 70% CLTV. And you are looking at 12.25 lowest cost option at a cost of 1.975. And you can buy that down to a rate of 11.75 at a cost of 2.475. And I will let you know, this is the only option of all of these options that has a prepayment penalty. This one actually has a 2-year prepayment penalty to allow us to get these low rates for a second mortgage DSCR loan. Previously unheard of, but we do have those at the Mortgage Calculator. So please do look to the Mortgage Calculator for all your second mortgage needs, loans, HELOCs, as well as all of the many products that we have for non-QM and agency.
All right. Thank you, Jose. I do not see any questions that have came in, but definitely amazing products to learn about here. Oh, it looks like we do have a question coming in here. We can pull that up here on the screen. Question is, what is the FICO needed for the investment alt doc HELOANs? Jose, you're muted.
You would have to run different scenarios. I ran these at a 760 credit score, obviously, to get the best rates. So you would really have to play with the LTV combinations. I don't not really know offhand what is the minimum FICO score requirement.
All right. Thank you for the question, though. I don't see any other questions. I think we'll go ahead and wrap it up. And remember, everybody, that we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different loan type. So we'll be back tomorrow with a new loan topic to talk about. We appreciate everybody tuning in, and we'll see you tomorrow, 11 a.m. Eastern, for the next.